Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, November the 21st. I'm Eric Wilkinson, and yes, you very well may recognize me as the Wolfman from mainstream media. But what I'm here to do is not only talk about the economic data and how that affects the markets, but more importantly, talk about options and how to implement those into your portfolios. But please remember, past performance of any trading system or methodology is not necessarily indicative of future results. All right, with that out of the way, let's get it on with the economic data. Across the pond, we did get a little bit of economic data, but not really a lot to speak about, just a Spanish auction for the most part. And they have monetary meetings over there at the ECB. Back here in the United States, we got the Philly Fed. That came in at 10.4, expected to be a 7.0. Nice increase there, probably, well, that is a reflection of the manufacturing sector, and it is good to see that heading into our PMI data because, you know, strong manufacturing, that should lead us to believe that the PMI data, at least here in the United States, is going to be looking up. Then we also got unemployment claims. Came in at 227,000, expected to be 215. Now, when we see unemployment claims increase, that's usually considered a bad sign. Well, we are at record low unemployment right now, and we're heading into the holiday season. A lot of people will be coming off of the porch, if you will, and start to look for jobs heading into that holiday season. They want to buy presents, right? Put under the tree or whatever, and that isn't really outside the realm of expectations. Remember, unemployment claims are new people claiming for unemployment, and those are usually the discouraged workers. Those are people that didn't have a job, had kind of fallen off the unemployment line because they weren't able to find a job. They are no longer considered a statistic at that point. And then we got existing home sales coming in at 5.46 million units, expected to be almost 5.5 million units. It's lower than expected, but one thing to note is we are seeing some really a lot of interest shifting towards those homes because interest rates are actually like a full percentage point lower this year as opposed to 1 year ago. So that is something that we would start to expect to see. You know, I've talked about this before. People were probably sitting on the sidelines waiting for more interest rate cuts. That could be still the case, and why we're seeing some of those home sales not go through. Those people might be sadly disappointed if they wanted to buy a house before the end of the year, though. All right, natural gas storage is a big drawdown, 94 billion cubic feet, expected to be 84 billion cubic feet. Now, that's probably due in part to lower than expected temperatures for November, especially in the Midwest and the America North, if you will, because we had this Arctic blast that came through. Ski resorts out in Colorado, Utah opening up, record early season starts, I should say. So that is all a part of that, more natural gas being used to heat those homes. We also will be waiting to see what happens tomorrow. We got a lot of economic data that's going to give us a great picture on the strength of the economy here in the United States and abroad, because it is Purchasing Managers Index, and that is more forward looking. Those are the ones I really like to look at. All right, having said that, let's get over to crude oil. Just back below $58 a barrel. Now we're back above. So it is toggling back and forth above and below that line in the sand that I've talked about that lines up with our Fibonacci right here, which is 58. Now, one thing to note, we've got a lot of overhead resistance here as we start getting outside of the point of control. Now, the point of control is going to act as a magnet here. Like I've said, I've expected crude oil to come off a little bit, but ahead of these economic data points, they must be expecting there's going to be some good data coming out of Europe and here in the United States, and those flash PMI numbers for the manufacturing sector. But we are just back and forth above and below this $58 a barrel right here that we're looking at. Now, we've seen several tests of this line here, okay? So those several tests on this $58 a barrel line is, you know, at this point, to me, feels like it's going to get breached, and we are going to go up and test the value area high here maybe I should write that in a different color, but the value area high is lined up with $58 a barrel, or $59 a barrel, let's call it, because it's we'll round up a couple of pennies there. But that lines up perfectly with that $59 a barrel. To me, it looks like it wants to go and look to test 60, which lines up pretty close to this line in the sand there. That to me feels like where we are looking like the market wants to push. Now, do I think that the economy is really driving demand enough to get it to $60 a barrel? I don't think so at this point. Now, my mind could change tomorrow based on the economic data that we get across the pond and here in the United States, again, on those PMI numbers. But at this point, I think that, you know, the demand here is not really supporting a higher price for crude oil. But having said that, we are also seeing the crude oil trending higher this way and not breaking below to go back to this $55 a barrel, which is where my target is for the my target for crude oil. Now, I don't have any positions in this. I'm just kind of keeping an eye on it. You know, it is a leading indicator, so we would expect that they are seeing more demand going on in the manufacturing sector. It's not all just about gasoline prices here. All right, let's move over to gold futures. They are coming off just a little bit. We can't get up there to that $1,500. I was expecting the market to really start moving back towards that area and building a nice volume node in crude oil around this area, or sorry, in gold futures around that $1,500 a mark. That's where we've been creating a volume node, and I would expect this point of control down here to shift higher to that 1,500. That's just with the uncertainty, dollar getting weakened. I think that causes this. That should cause strength to gold and drive it towards that 1,500 mark. All right. Aren't seeing that right now. It's showing a little bit of weakness, but I do expect gold futures to kind of creep a little bit higher here in the future. All right, bonds are coming off a little bit today by 11 ticks. We are just toggling back and forth on that resistance area of 160 handle. You know, I talked about this several times. That's where I see value for the bonds, is right there at that 160 handle. That is where the bulls and the bears are going to be battling it out. Despite the fact that it is a value area high, in this case, it seems to me that you know, it's because the point of control is so much lower than where we are now. But we have been in an easing cycle, which causes rates to go lower, right? So we can talk about, you know, if we have rates and the pricing here, well, what's happening is rates are going down. So if rates are going down, that means price is going up. It's kind of a teeter-totter effect, really. So if you want to try and figure that out, it's the back and forth on this. We are seeing rates go lower, which should drive prices higher. Now, this point of control for bonds is way too low for the type of interest rates we're seeing right now, and therefore we should see some volume picking up in and around and time spent in and around this 160 handle. It's going to take a lot for that to shift that paradigm higher. As you can see, this volume node and time spent is much greater than up here. We've gotten a bit of a sloppy curve here at the top of the markets as people were trying to really decide how low rates would go. But right there at the 160 handle is kind of where value should be. All right, we've got VIX moving higher. It's back into the 13 handle, so teens are back in, and that's because we're seeing weakness here in the equities. Now, yesterday I was talking about it was going to be a real point of contention to settle above our 9-day simple moving average, which is this blue line right here. This is the 9-day simple moving average. Now, that is a short-term indication as to strength and weakness in the economy or in the markets. So as it settles above that, that continues our thought process of a bullish trend. Once we break below, like we have right here, broke below there and settled below there, that showed weakness going forward. We didn't see that yesterday. We did see the market trade below that. That's not necessarily the indication. Today, with the setup right now, a settlement below that would give us an indication that there is weakness ahead in equities and looking to go back down and test some of the support and resistances. You know, the next one would be the 50-day moving average right here. This is the 50-day. And then the 200-day, which is just slightly below that right here. And this is the 200-day. So I don't know that we're going to necessarily come down here and test this area, but this 50-day surely is something that we would be looking for if the markets started breaking below that 9-day. Yeah, we have the value area right there lined up with the 27,377. That would definitely be in the realm of possibility. I would think that that would be almost a sure thing. And as price isn't being accepted up at these levels, as we can tell by the volume nodes here, that the market would want to come back down and trend, should say that it should want to trend back down into this area here. Okay, so I don't have an exact pinpoint on it, but you can see that there are some low volume nodes and the market could very well build out a very large bell curve there. All right. So keep that in mind. A settlement below that 9-day is going to be showing weakness going forward. Same thing going on with the NASDAQ. You can see NASDAQ settled above that 9-day moving average. Right now we are below it. Yes, that does look like we could be finding a little bit of a bottom there, but if I take out the overnight, you can see that that there is a lot of weakness in this candle for the day session. We'll see that show up a little bit more when we get to the E-mini S&Ps on the daily chart. You can see that most of that higher move was created overnight by opening much lower than where we are currently. Philly Fed giving us a little bit of a boost here in equities. All right, E-mini S&Ps bumping up against that 9-day moving average. You can see the 9-day moving average right here is being tested as we're bumping up against that. But again, a settlement below that. And if we take out the overnight session, you can see that it is a red candle. Basically, the day session opened up near the highs and has continued to start to see some weakness. Now, we opened up a little bit higher than the overnight session because of the good economic data coming out in Philly Fed. All right, so you can see that the market is much different looking. And here we go. When we look at the overnight trade with the E-mini S&Ps, we did have that nice big rally into the close yesterday, but as soon as the market opened, we've gotten slammed to the downside. All right, so that was what created that low. Overnight inventory very long coming into the day. The day session flushed those guys out. You can see that weakness happening right there. And since we've gotten the economic data, we're seeing some positive move to the upside. Now, keep in mind, the 9-day moving average is something we're going to have to keep an eye on going forward. These simple moving averages are based on different metrics, so it's going to look a little bit different here. But you can see they are trying to make a move higher here today, and a settlement below the 9-day to me is going to be showing weakness going forward, especially into next week. Now, if we get great economic data tomorrow, even though we settle below that 9-day moving average, it could bunk that trend. But to me, it is going to be something we are going to have to keep a very close eye on heading into tomorrow. Now, that's about all I got for you guys today. Other than this afternoon, I'm going to be doing a webinar on the short call. I'm going to be talking about, yes, anybody can build a short call, but or short call spread, I should say. But I have specific rules in and around how to build that strategy out that you need to know in order to implement that ahead of time into your portfolio. Okay, so it's not just about selling at any willy-nilly spot in the sand. We talk about specific rules that you need to follow in order to set this strategy up to increase your probabilities of success. So find out that stuff in the webinar today. So go to protraderstrategies.com and get signed up for that. Also follow us on Facebook. We're sending out a lot of great content there that you can get access to as well. All right, that's about it. Other than if you can't take that, Take it easy.